Mondi's first quarter underlying operating profit rose 35% to 162 million euros. The paper and packaging unit said a decision to close the Lindlar operation in Germany was taken during the period. Mondi said Lindlar production will be redirected to existing plants in Germany, Hungary and the Czech Republic. We caught up with David Hathorn, who's CEO of Mondi, and spoke about growth in the packaging sector.
Our long-term strategic trend has been to increasing our packaging exposure, and as a consequence, the paper exposure will decline over time. So that trend will continue, and these results that we are posting at the moment reflect the benefit of the investments we've made in increased packaging. They also, of course, reflect the fact that prices are improving compared to the beginning of last year, and volumes are also up. So generally, it's a better trading environment than it was in the first quarter of last year, and we're enjoying the benefit of those acquisitions.
Enjoying the benefit of those acquisitions on the one hand. On the other hand, you're making quite a few changes to business operations at large. We've seen newsprint machines being closed in South Africa, but in Germany as well. So take us through the status of operations across geographies, or are we looking at across-the-board dynamic unfolding?
No, look, I think we are, the changes we're making are relatively small in the greater scheme of things. So the closure of the machine in Nearbank is clearly an important step for that particular plant, but in the totality of Mondi is a relatively small profit impact. It will have a small profit benefit. And the closure of the plant in Germany is really a rationalization opportunity following the acquisition, where we now have a broader network of plants, and we are closing a good profitable plant and transferring volume from that plant to nearby plants to achieve greater efficiency, greater plant optimization, and as a result increase profitability. So it's a pretty logical step to be taken. It's really not dealing with, there's no need for us to be rationalizing per se. We are simply taking opportunities to improve our profitability by optimizing existing profitable plants.
Within what kind of competitive landscape?
It's the demand environment is pretty stagnant in Europe. It's an unexciting economic environment at best. Recessionary certainly in the southern parts and flat in the central part. So it is a difficult commercial environment to be operating in, and that's why we're pleased with the performance that we have. We're doing very well despite the macro environment, and I think that reflects the strategic steps we've taken and the competitiveness of our business.
Putting the focus specifically on operations in South Africa, how are you rating doing business in South Africa right now as a manufacturer?
Well, we've simplified our South African business quite dramatically over the years, and as a result our skill sets are better suited to the requirements that we now have. So I think we've got our business in South Africa in the right shape for the skill set that we have to optimize it properly. Clearly we're facing increasing costs, electricity, other utilities, port costs and the like. All of those are factors that one has to overcome. And that's part of the reason why we have been through an ongoing process of cost optimization, rationalizing the Nearbank site in particular down to what it's likely to now stay for a long time to come. And it's now well dressed for the environment in which it sits.